Overall, the market is moving from an established downtrend into a horizontal range that is fairly wide, but still quite clear and well-defined. Although it becomes a bearish continuation range rather than a bullish reversal range, it can still be a useful structure to reference, especially now that there's a similar situation except this time there's greater bullish progress. Now returning back up into this range from approximately 93 to 124 will expectedly lead to more bearish to neutral movement. For more detail on horizontal levels, a Fibonacci retracement can be placed from the last major downswing point of the bearish continuation range down to the lowest point of the recently completed bullish reversal range. This can be paired with a trend-based Fibonacci time zone based on the same price range and first upswing point of the current uptrend. And right away we can see these placements and combinations of tools mark key areas in the formation of the bullish reversal range, along with its completion, breakout, and continuation towards the development of this current uptrend acceleration. And now it's not much of a surprise to see a slowdown upon contact into the 120s. Naturally, the intersection with this time zone line leads to a tension of the neutral to bearish kind. Though so far there's not a huge drop, with price holding steady on the solid 118 level now offering firm support. And with persisting resistance in the mid to upper 120 range, it's obvious there's a defined range forming. It might look familiar to you. The conclusion of this range will likely begin around the time of this next interval line. In this case, price is staying near the upper intersection rather than the lower one, pointing for more potential for this range to lead to a bullish continuation rather than a double top reversal. So with this advance higher, price still tends to flatten or even decline when price is rising towards the next intervals marked by the trend-based Fibonacci time zone. With clear downswing points in the downtrend, the trend-based Fibonacci time zone can also be shortened. But that's not very useful for getting coverage further into the future, like with the first placement. Though we could shorten the range for the Fibonacci retracement and the extension levels, and see that most of the same important resistance areas are marked. And it's a similar situation when we shorten the range even more to just the bullish reversal range.